public lecture by Dr. Arvind Subramanian, Chief Economic Advisor to the Government of India. I have his long CV and right up here, but I don't think so that would be necessary in the circumstances. Suffice to say that I'm sure that this talk, like all of Arvind's writings and speakings, would be enough to keep us engaged. A small request is that kindly switch off silent flight mode. You know, if we have to listen to music, we'll do after the session. Kindly, let's have a good time. Arvind, over to you.
Thanks, Shakti. It's a great pleasure to be here. Hallowed surroundings, eminent people, a prying media as always. So it's great to be here. Now, let me tell you what I'm going to talk about today. And you see the title of this is Macroeconomic Commentary in India Compromised. I'm going to be kind of honest with you that this thing is going to be in two parts. The first part is going to be largely drawn upon, you know, a talk that I gave last week. So my apologies for the repetition. But I think there is justification for that repetition, in part because, you know, many of you didn't hear what I said earlier. And much more importantly, some new data came in after the talk that I gave, which has in fact, I would say, increased the salience of what I'm going to say today. And then the second part is going to be a little bit more waffly, a little bit more, you know, unclear, fuzzy, where, you know, essentially what I do in the first part is I'm judging and throwing stones. So the natural question is, you know, what gives you the right to throw stones? Have you, you know, applied all that to yourself? But I want to make that into a kind of more conceptual rather than a personal thing. So so the first part, think of it as me lambasting the quote unquote outsiders, and the second part as, you know, all of you getting a chance to lambast people like me, who are what I would call, you know, some of us are insiders, but some of us, I think, like me, are what I would call insider outsiders. So I think, you know, what are the standards to which you should hold people like me? It will be the second part of the discussion. I hope that's okay with you. Okay. So let me start with the first part of my commentary. Yeah, exactly. Yeah, exactly. So yeah, that's why I didn't put up slides as well. Yeah, that's why I didn't put up slides. Yeah. So, but I won't be. I'll try and be as simple as possible. But, you know, some examples. I will throw some examples. Yeah. So, you know, macroeconomics is central to the work we do at the Ministry of Finance and the Reserve Bank of India. You know, so many key policy decisions are driven and underpinned by an assessment of the macroeconomic situation. For example, should the fiscal deficit be higher? Should government, you know, run a bigger deficit? Should public investment be increased? Should the RBI, you know, increase interest rates or lower interest rates? These are all very, very important questions that touch upon the lives of millions. But these are all critically dependent on our assessment of the current state of the economy and where we think it's headed. So far, non-technical, sir? So far, so good? Yeah? Okay. So formally, these are assessments that are obviously made by the key policymakers. For example, the Ministry of Finance, the minister, in consultation with several people, makes key decisions on fiscal policy. You know, how much should be spent, how much should be taxed, tax rates, et cetera, et cetera. On interest rates and exchange rates, I think these decisions are, of course, they used to be made by the Reserve Bank of India. Some say they used to be made by the governor of the Reserve Bank of India. I don't know. I've never been there. But now, of course, these decisions are made by a committee of 6 called the Monetary Policy Committee. Of course, you know, the joke is that they try and give advice to each other. the advice is almost always unsolicited and gratuitous. The advice is almost always the same. We say you cut the interest rate, they say cut the fiscal deficit. And it's almost often the case that the advice is ignored. So unsolicited advice, same advice, ignored advice. That's kind of the situation. In fact, the Ministry of Finance and the RBI are far from the only bodies that give advice. Assessments of the macro situation are and must be the result of a far wider process in which inputs are also provided by experts in the private sector, academia, think tanks, civil society, places like the Nehru Library. Of course, in each case, the experts could be Indian or foreign. I can honestly say that as Chief Economic Advisor, I read a fair amount of this macroeconomic commentary analysis. I look forward to it. I depend upon it. I'm enlightened and learned by it. But I have to say, is what I see is a clear or a kind of semi-clear pattern, and that pattern is a worrisome one. My central thesis is this: much of this expert opinion, not infrequently, is liable to being compromised. I don't know how many of you remember that in the late 1800s, a very famous Jewish French soldier was unjustly framed for being a spy. It was actually anti-Semitic. Very few people spoke out against it, except this great writer, Émile Zola. And he had a headline which just says, "J'accuse," that means I accuse all of you. I'm kind of in a less dramatic way, I'm going to say the same things. But what is my criticism? My claim is that experts often hold back their objective assessment. Instead, they censor themselves, and in public fora are insufficiently critical and independent of officialdom, whether the officials are in Mumbai or Delhi. To the extent they offer criticism, it is watered down to the point of being unidentifiable as criticism. But I made a strong statement, and I think discussions are more interesting if they are strongly worded, and so I have to stand up and defend what I'm saying. But I do want to add two caveats. First, what I'm asserting is not necessarily unique to India. I think these misdemeanors are widely prevalent across the world. And also, I'm painting with a broad brush. I'm sure and I'm confident there are a number of exceptions within India to what I'm saying. I think there are lots of pockets where what I'm saying is not true. Still, what strikes me is how few these exceptions are, how frequently the experts are willing to engage in public debate about the macroeconomy. In fact, I was doing a TV show recently, and the anchor said that he does a lot of these budget, after post-budget events on camera, and he says it's amazing how when the ads are going on, all the people there, the industrialists, say what a rotten budget, and as soon as the camera comes on, they say, since sliced bread, there's never been a greater budget than this one. So that's kind of a little bit the pattern that I want. I don't know what. Okay. So my question is, why do the experts do this? Why do they refuse to speak truth to power? If you ask them, they would just say that they're trying to be constructive. But I feel something else is at work. For a variety of reasons, experts feel they need to stay on the right side of power, whether the RBI or the government. So before policy decisions are taken, the experts tend to express the views they think officials are likely to take. After policy actions, they try hard to endorse the decisions already taken. As a result, we in the government do not really fully benefit from their wisdom. And this is a serious problem because high-quality policy making demands high-quality inputs and high-quality debates. The paradox is this, and this is something that is very interesting. I think we need to explore this much more, which I'm not going to do today, is that in other spheres, such as trade policy or development policy, one sees a more vibrant, healthy, and unself-censored debate. Something about macroeconomics seems to be a little bit different. Now, let me give you one example. If you take issues related to the WTO, for example, I think everyone and his uncle has a view on the WTO in India. I mean, you can hear reams and reams of people writing about the WTO, and good, bad, but the usual spectrum, some very good. It really enriches the debate. But you don't see that to the same extent in macroeconomics, is my kind of humble submission. Why is that? Again, offering not explanations, but three possible hypotheses. First, I would say a major source of macroeconomic commentary is from stakeholders such as bankers and other financial sector participants whose relationship to officialdom is not necessarily arm's length. Bankers are careful not to get on the wrong side of the government or the RBI because they worry about losing access and because they are regulated by them. I think here the famous Upton Sinclair quote comes to mind. It is difficult to get a man to understand something when his salary depends upon his not understanding it. I think that's, you can adapt that to the current situation. Second, when it comes to the more disinterested commentators, think tanks, academics, etc., I think there may be a certain intellectual diffidence, a lack of self-confidence. Macroeconomics, and this is where I'm going to get a little bit technical, macroeconomics is different from, as Air India policy, privatization policy, seed policy, agriculture policy, because macroeconomics, I think, is profoundly general equilibrium in nature. That is, it is not about just studying how one market works. It's about studying how many markets work together. In fact, Vijay Kelkar, one of India's wisest statesmen, always tells me that, Arvind, I find macroeconomics beyond me. There are too many, things going on. And, just to be a little bit crude and technical here, if you think about it, the great Keynesian revolution in terms of thing was, Keynes said you have to study three markets together: the market for goods, the market for money, and the market for bonds. That was the great, Keynesian contribution, and it came together after Keynes. Nowadays, I think you have to add a fourth market, which is the foreign exchange market. So if you want to intelligently understand macroeconomics today, and write about this, you have to understand how these four markets hang together and what their relationships are. Exchange rate goes up, it's good, bad. Interest rates come down, exchange rate also goes down. Fiscal policy affects interest rates and exchange rates. So I think it's fairly complicated at one level. And also, because of these complexities, it's much more difficult to be sure of the optimal policy stance. If you look internationally, for example, that, there's so much debate about, whether there should be Keynesianism, austerity, or whether there should be, less austerity. There's a lot of debate on this. So I think all this discourages even the most independent commentators from standing out, from being contrarian to conventional or official wisdom. That said, I think something deeper is at work here as well. And here I'm sticking my neck out. For example, if you take micro issues or development issues, India and Indians have always been and continue to be at the global academic frontier. If you look at our roll call of great economists in India, I don't want to list them because when you list something, you exclude some, and then people say, he doesn't think, he's a great economist and so on. So if you go back, from, the great, V.K.R. Rao, K.N. Raj, all those, Malanobis, all of them, the man who said the Hindu rate of growth, Professor Raj Krishna, K.N. Raj, you name all of them. They were great agricultural economists, development economists, and then of course, T.N. Srinivasan, Jagdish Bhagwati, Professor Sukumar Chakravarti, all of these were, great development economists. But, in some ways, I think that India never had, not at the academic frontier, as much as in other issues. And that's true even today. For example, while there are many Indian economists working abroad and in India, there is very little research on Indian macroeconomics, even in the United States. If you talk about poverty or, employment guarantee, everyone wants to work, or trade or development, everybody wants to work on India. But when it comes to macroeconomics, that's not the case. Indian macroeconomics, to be a bit crude, is just not sexy enough as an academic discipline. Now, why that's the case, I don't really know. Maybe we don't have enough data, whatever it is. But I think this is a matter of sociological interest that needs a greater investigation. So today I want to illustrate some of these ideas with two examples. I'm not going to go into the rating agencies example, because all of you then only write about ratings agencies, and I don't want to talk about rating agencies at all today. So I'm going to give you one example from fiscal policy and one example from monetary policy, where I think that what I'm saying may have some validity. There is, on the domestic side, there is a clear relationship between expert analysis and official decisions. Before policy decisions, the expert analysis is often illuminating, but once the decisions are taken, it's truly striking how the tune and the tone of the analysis changes. Analysts fall over backwards to rationalize official decisions. Let me give you two examples or three examples. When the FRBM was originally enacted, way back in 2003-04, it had been an article of faith in the economic community that the government ought to abide by its strictures. So you enact an FRBM law, the government says, I commit myself to a path for the fiscal deficit. About a decade ago, however, the government decided to conform to the letter of the FRBM while violating its spirit by issuing large sums of off-budget bonds to oil companies to window dress the magnitude of the fiscal deficit. So, oil prices go up, your subsidies go up, it should show up as in the deficit, but then you do these accounting shenanigans and say, no, this is not a subsidy, it's something else, and then you obscure the truth in some ways. In that instance, I recall that the response of the experts was a whimper compared to the magnitude of the concealing actions. Once the decision was made, it was rationalized rather than vigorously challenged. So that's one example. Something more recently has happened in the years that I've been here. A similar dynamic can be seen in the assessments of more recent budgets. Before the 2016-17 and 2017-18 budgets were announced, and this, I'm confident about, outside views, the expert views, industry, think tanks, academics, spanned the spectrum. Some said government should stick to its pre-announced target. Some said, no, go slower. Instead of going from, say, 3.9 to 3.5, maybe go from 3.9 to 3.7. Others said, no, expand the deficit, 3.9 to 4.1. Here, I don't want to get into the merits of what is right, what is wrong. You should read my FRBM report on this, my note on this. I don't want to get into that. But what is interesting is that whatever their initial view, once the budget was announced, commentators almost uniformly endorsed the actual government policy. One would have thought that they would be at least mildly embarrassed by their change of views, but they gave no sign of such embarrassment. Indeed, they didn't even admit they had changed their views. And here, to be a little bit technical, if the range of views before the budget deficit target is announced is like this, the range of views afterwards becomes like this. And I think that's, the point I'm making. I don't want to get into what is right, what is wrong. That was especially true, by the way, of the 2017-18 budget, because there genuinely, people said private investment is weak, therefore, actually you should expand the deficit. And so the span of views collapsed afterwards. So that's my example on fiscal policy. Let me give you my example on the current macroeconomic situation and other policies. Perhaps the epitome of this dynamic can be found in the assessments of monetary policy. Consider how expert assessments have evolved just over the past few months. After demonetization, a consensus had built up amongst the investor community and the economic analysts that the RBI would cut interest rates. This consensus was based on a declining trend in inflation and the projected short-term adverse impact of demonetization on growth. It turned out that the MPC did not cut. Instead, in February, it signaled an even more hawkish stance, going from accommodative to neutral, and since then it has maintained that stance. And yet, instead of criticizing the official decisions as consistency would demand, analysts found ex post logic to attribute merit to their decisions. That is, far from criticizing the authorities for holding rates constant over the past 3 announcements, analysts praised the policy stance as prudent and helpful in boosting the credibility of the government, of the monetary policy RBI's inflation targeting framework. Now, please, I am not taking a view on whether the RBI was right or wrong. As a Ministry of Finance official, I have no view on interest rates. I was hoping all of you would laugh at that, but you didn't. But that's okay. While the RBI's decision may be commendable, it is odd that before December, experts saw no inconsistency between what they had said and going over backwards to say that the credibility of the central bank was enhanced. To be fair, some change in position could be warranted, either if the official assessment revealed something about the economy that analysts did not previously know, or if they learned something new about the RBI's preferences or reaction function. Since December, I think to be fair, there has been some new revelation of preferences that they learned about the RBI. After some ambiguity in September, the Monetary Policy Committee clarified only in February that its target was going to be 4%, not 5%. So, but even allowing for this factor that legitimately entitles analysts to change their opinions, I think the analysis and commentary has remarkably toed the official line post facto. My second point is perhaps even more fundamental. I want now to just take you through a little bit, and here I'm going to give you some very broad numbers. Treat this not as my update or that of the Ministry of Finance, but that of a disinterested observer, say who has just landed from Mars, say brought home by our satellite Mangalyaan. I mean, think of Mangalyaan as bringing someone, and he gives you an assessment of the economy. And here what I want to say is that, especially after the data that came out yesterday or day before, one can probably say, or I think one view is that inflation pressures are easing considerably. The inflation target has been overachieved. The inflation outlook is looking relatively benign. It's possible that real sector activity, GDP, etc., is weaker than people thought and the economy needs, and well below potential, and the exchange rate is appreciating, affecting our exports. Against this background, many reasonable economists would say that the economy needs all the macroeconomic policy support that it can get. Instead, these economists would say, not me, these economists from Mangalyaan, that both fiscal and monetary policy remain tight. Now, here are my questions. This is my questions to the investor, expert community. Have they, and here I mean the thrust of opinion emerging from the community, have they highlighted that in fact we have overachieved on inflation well in advance of scheduled targets? I mean, this is something that actually is something that I'm sure very few, because there's been no commentary on this at all. Again, remember, I'm not saying right or wrong. For about 8 months, we overperformed on inflation even relative to the target, and yet I think very few of you would know that. We are also overperforming on our next year's target already. Very few people know that. The question is, why? Have they highlighted, for example, that a measure of inflation called core inflation actually has been declining steadily for several months now, and is on target to achieve the medium-term objective of the monetary authorities? Have they highlighted that when the currency becomes stronger, it will actually dampen inflation going forward, and that's why the inflation outlook is benign? Another very important point, have they highlighted that if you read any kind of commentary on the future, they will all say, it's like almost a badge of seriousness and respectability. Geopolitical shocks and oil, we must guard against that. Standard. But have they highlighted that ritual invocations that oil prices could increase because of geopolitical risks are less plausible today because oil markets have fundamentally changed, placing a lid on upward price movements of oil. Have they highlighted that perhaps real activity could be recovering slowly, not rapidly, and hence that output gaps could be widening, moderating inflationary pressures? If you look at the latest IIP data, for example, it shows, IIP growth, decelerating since about, July of last year. Have they highlighted that fiscal policy? Hello? Yes? Sorry? Highlighted that fiscal policy, and remember, this is, has been tight. And to paraphrase something that Paul Krugman said many years ago, perhaps fiscal policy is even irresponsibly responsible at this stage because public investment has not significantly increased at a time of weak private investment. So these are all questions that one could legitimately ask. In sum, have they highlighted that inflation is under control, activity may be not as strong as it should be, calling for fiscal and monetary policy support? There is a famous joke about asking 3 economists for a point of view and getting 4 different answers. But ladies and gentlemen, I want to submit to you today that there are hundreds of economists outside the government and RBI and several within, including people like me. Instead of getting 100+ views or maybe even 200 views, we get about 1 view, the official view. So the joke about the economists, I would say, stands entirely turned on its head. Even more interesting, about a year ago, some officials, analysts, etc., were calling for a rate cut, a very large rate cut, and today they have gone silent. I don't understand why that's the case. Let me be clear. This alternative view that I presented, which is at variance with the consensus view, both on the assessment and the policy prescription, is not necessarily my view, and it may not even be the right view. But I think it is an eminently plausible view that must be part of the policy discussion, and yet we have not heard it or even anything close to it. In fact, I would say, reading the commentary of the last many months, it seems to me that there are some people from Mars and others from Venus, and the people from Venus have not even emerged and shown themselves up. It certainly doesn't show up in the commentary. I find this a somewhat disconcerting commentary on the state of macroeconomic commentary in India. I don't want to give you gory details, but similar things have happened in early 2015 when there were 2 successive rate cuts in between monetary policy meetings. These intermeeting cuts should happen only exceptionally, and that too only in response to new and unforeseen developments. But at that stage, the commentary was surprisingly incommensurate with the nature of the actions. I mean, you should all go back and read the history of what happened in 2015. Similar things are happening today on other aspects, and I can give you many examples. Okay. If what I have argued has some validity, I think a few conclusions follow. We need more disinterested voices. I mean disinterested in the sense of not having a stake, not uninterested. Especially universities, think tanks, independent researchers that are distant from and not dependent upon the apparatus of power to speak up. This may require us to beef up capability in macroeconomic teaching in our universities, so that we can build up the intellectual confidence for people to express contrarian opinions. In substantiation of this point, look at the debate on the FRBM committee report. Again, here, I'm not a disinterested party. I have a stake, but I don't want to go into the rights or wrongs. But I'm really heartened by the debate now slowly emerging from the FRBM report. But this debate is gathering steam only because of thoughtful contributions of independent voices, not because of the banking community or this community. Professor Indira Rajaraman, Professor Pranab Sen, others, Montek and others have written. The investor community reported on the FRBM as if there was unanimity of views, which clearly there wasn't. Huh? Yeah, exactly. And aside, let me remark here that one of the interesting and potentially very positive developments about social media is that it has encouraged more academics in the United States and the UK to enter directly the macroeconomic policy conversation. I think, to me, one of the most striking things have been how journalists no longer are the gatekeepers of information flowing between the experts and public opinion. The experts have themselves stepped in, and if you follow the macroeconomic policy conversation especially the US and UK, it's very robust and rich. In India, I think social media is very active, omnipresent as elsewhere, but it has not yet become a forum for serious macroeconomic debates as elsewhere. I think another conclusion relates to the behavior of officialdom. I think we should also be critical. All officialdom wants validation for its actions. So in the short run, it will want to shape opinion in its favor. But in the long run, that's perhaps not desirable. Public interest is perhaps better served by richer debate that encompasses critical views, including of officialdom. I think officials should signal that clearly. Now, there is, of course, the famous opening line from a very famous essay by Francis Bacon of Truth. Francis Bacon was considered the father of the scientific method. The line is, what is truth, said jesting Pilate, and would not stay for an answer. I think in this post-truth world, with non-overlapping echo chambers of opinion, NDTV, Republic, they don't talk to each other, for example, perhaps Pontius Pilate would have actually would have wearied of even asking the question. It's not even worth asking what's truth anymore. I think it's come to that stage. But one thing is certain. Truth, no matter how elusive that notion is, the discovery of which, no matter how hard that search is going to be, requires diversity of opinion. That diversity will require both competence and capability. And above all, it will require voices that are not silenced, compromised, or conveniently moderated by the lure or fear of power. Now, I've ended this part with power. I want to go on to the next part. In response to what I'm saying, which I'm basically throwing stones, the question can legitimately be asked, what right do I have to make these judgments? After all, if I'm in a glass house, people in glass houses should not throw stones. Okay? What gives me, and maybe I'm being insufficiently sympathetic to the constraints facing the outsiders who I have criticized. Maybe you're a think tank, but maybe you're a think tank which requires money from the government, and then that affects, that's going to have an impact. So the question is that how does all what I've said apply to the insiders, the wielders of power? All right? And I'm going to ask how it applies to one kind of variant. It's a mutant gene. You have insiders, and you have this new beast called insider-outsider, of which I think of myself as a representative of this category of insiders, outsiders. I'm not sure this is a legitimate distinction, but for the purposes, let's just assume that it's a legitimate distinction. I think the unwritten rule is, for insiders and for insiders, outsiders, is that inside you try and influence the debate as vigorously, honestly as possible. But once decisions are taken, outside you go and publicly defend decisions taken the inside. I'm sure, Shakti, in your IA's role, that was kind of what was taught to you as an outsider. A different way of putting that is, and I think several people have said this to people I know, choose. Either you insider, you're an outsider. If you're an insider, you have the privilege of being inside and this, but that comes with certain responsibilities of how you must comport yourself externally. If you don't like those rules and constraints, go out and speak as loudly and truthfully and bitterly and acrimoniously as you want. That's the choice. That's the kind of, I think, unwritten rule. I want to explore the possibility that perhaps that rule is not totally right. That there is perhaps something about the insider-outsider that gives him or her some extra space, both what he should or should not do internally and what he should or should not do externally. It's possible that an insider-outsider, partly because, he's an outsider, he's come from the outside, and maybe has outside options, maybe he has more space, and therefore can be even more vigorous and honest and truthful internally. And maybe he has the space also to speak externally outside in a way that, Shakti as Babu could never say anything about the government that was critical of government. The question is whether insider-outsiders have a little bit more space than, insiders had. Now, that space, I think, has to be acquired. It's not, you cannot take it for granted. I don't think any insider-outsider should think that when he or she comes in, that he has necessarily any more space than the insider. I think that space has to be acquired. It has to be earned. It has to be gained, because otherwise you have to have the trust of the people inside in order to be able to, do that. So, and that's not easy, and I don't think, but I would say that once that space is acquired by the insider-outsider, it's actually a very scarce and fragile commodity, and needs to be used with utmost, responsibility, tact, respect, and knowing the limitations. One of the, I think, the responsibilities or the really enlightened people who use this space are acutely aware of the limitations of that space or the limits of that space. I think you have to be aware of that. And that choice is going to be, very person-specific, very, circumstances-specific, and also upon the relationship that he or she enjoys with the people he or she interacts with. I think one of the mistakes that insiders, outsiders make is to kind of succumb to this, validation by, the Economist or the Financial Times as, as kind of the mark of thing. And I think that's also a pitfall that needs to be avoided. Here, I think of this in some ways as, if I may be permitted a kind of metaphor from the Mahabharata, and, please excuse my pronunciation. It's going to be a South Indian's pronunciation of all the characters in the Mahabharata. I don't say Karna, which I probably should, but I say Karna, and my apologies for that. So I think of this as kind of the Karna versus Arjuna conflict that goes on for every insider-outsider. I think that, for example, it is kind of expected that the insider-outsider should not say things in public that are, maybe critical of government or, or don't strictly toe the official line. And then, of course, the dilemma is, if you're Karna, your dharma is loyalty, so you privilege that thing and you say, I belong to government, I'm of government, I'll respect that. But you could also see someone saying, but there is kind of loyalty to a higher truth, to dharma itself, and that might require, sometimes, saying that I will, privilege that dharma objective over the loyalty objective, and so maybe more outspoken in public. I think in some ways also, I think that sometimes the conflict becomes a false conflict. There are times when, some people respectfully say some things in public, even though they're in government, where in fact at one level it seems like you're not towing the government line, but at another level, even the ability to say that speaks very highly of the government in power, because it's like, you can see that they've given this person the space to speak, and therefore it says something about the quality of governance in that regime as well. So, now I'm really rambling, my apologies, but I'm reminded of a famous, Robert Solow, the Nobel Prize winner. He used to say that discussions of economics would begin with great vigor and end in a blaze of amateur sociology. And in a sense, I think that's what I'm succumbing to now. I began with macroeconomics, and now I'm waffling on about Karna and Arjuna. So my apologies for that. But I think this is something that actually, as an insider-outsider, I do struggle with, on an ongoing basis. What are the, the respectful limits? What are the limits you can exceed? What are the limits one can't exceed? When, how, and so on. So I think this is it's something that, I think about very often. So I just want to say that, for example, if you look at the FRBM report, there was a consensus view, and, I felt very strongly that there was an alternative point of view, and so I wrote a dissenting note. I think I'm sure that there are areas where I have failed because I should have spoken up much more strongly, both internally and perhaps even externally. There are other situations where I feel maybe, in small ways, I did not the wrong thing. But it is a struggle that I think that, one goes through all the time. So in conclusion, I want to say that I have this, strong opinion on the outside experts and the fact that macroeconomic commentary is to some extent not as rich as it should be because of the lack of diversity of opinion, because of being, as I said, compromised or conveniently moderated by the lure or fear of power. But I think it cannot be a kind of one-way handing out. I think those inside, the insiders and insiders, outsiders, also have a responsibility to ask the same questions that they ask of outsiders, and discharge. And think about that to the best. I think that can I make a stray, just completely, given that I'm in the Nehru Memorial Museum. See, I don't want to get into this. Was he a good guy? Was he a bad guy? I know it's all a fraught business, in this day and age. But I do want to say that, I'm always reminded of that one incident where, I don't know, Shakti, whether you remember that, Jawaharlal Nehru used to go out and write these opinion pieces anonymously, lambasting the Prime Minister, Jawaharlal Nehru. And I think to some extent what I feel is that, the insider, outsider, I would say that one of the few checks against, not misusing one's privileged position is to be reflective about the privileged position and its limits and its potential abuses and how one wields them. And I think that self-reflective character that Pandit Nehru had, I think it's something that is worth, whatever you may think of his Kashmir policy or his China policy, I don't want to get into that, but I think that certainly that, being self-reflective about privilege, power, its use, its abuse, is I think something that all public officials should have, and of course, outsiders should have it. That's my critique, but I think insiders should have it as well. So with that, thank you very much for listening, and I'm sorry if I've gone on for much longer than I should have. Thank you.